Welcome you all for today's session. What I am going to dig into today, I will try to reveal the secret of stat rulers in the financial market. Try to discover, are they investors? Or they are traders? What exactly is the reason for them to be successful? See, trading and investing are two sides of the same coin. You will be always made confused with the multiple terminologies. But you just need to stick to the basics, every basic process and different basic steps of each process. Your goal is to grow and protect your wealth. In order to achieve that, you need to apply the right methodologies and use right instruments. It may be investment method. It could be trading method. It does not matter. It also does not matter what your process tagged by what name. People can call you as trader. Or people can recognize you as investor. It's easy to say, but hard to accept. There are different social stigma that make people uncomfortable about their profession. Because stigma often leads to discrimination. I know and thoroughly understand that. Let me try to clarify few things today, exactly the same way I understand. In the middle of every debate, one identification of your approach is very much important. Whether I should take the approach of an investor, or I will concentrate on trading. If I need to do both, what should be the right mix? I need to spend more time on trading or sit for more idle time after investing into certain asset. Everyone tries to find the golden rule. They look for a ready-made template. Please don't rush. You will find your answer as you understand better on different perspective of different methodologies. Let us first look at the bookish definition of investment and trading. Investment means to one acquires some asset with the goal of appreciation to a target value. And the holding period is long-term. Sometimes investment does not have any fixed goal. Automatic question will be, who can guarantee that all the assets will appreciate all the time? Also, it is difficult to define what is the exact meaning of long-term. That is also very much relative in nature. It will vary from person to person and requirement to requirement. On the other hand, trading is defined as buying asset and selling assets. Holding period is short-term. It is more target-oriented within some specific time frame. Again, the same question, what is meaning of short-term? Long-term and short-term are very subjective terminologies. Also, it varies from asset to asset. This also depends your choice and requirement. I do not want to confuse myself. What I understand is simple. I will set aside money that I do not require to spend at my current situation and move it into some form of asset, including financial asset. And I should be able to liquidate it whenever I need that. As long as I do not need to liquidate, asset should appreciate. I will take some protection for the downside movement of the price of the asset. I will not complicate my life with different terminologies as investment, trading, hedging and other things. Here is my understanding and strategy. I will build diversified portfolio. I will add to that portfolio whenever I will have surplus money. I will trade on them. The trading timeframe can span between days to decades. Depending on the asset class, from taxation perspective, holding period is considered as long-term or short-term. For example, equities are considered to be long-term if the holding period is at least 1 year. Whereas debt funds are considered to be long-term if the holding period is more than 3 years. I don't not look at it my portfolio is the same logic. I will call that section of my portfolio as my investment, only that part that I will never liquidate in my lifetime. For rest of all my portfolio, all my actions are trading, trading and trading. Try to understand why I uttered the word trading 3 times. Please follow me. First, trading means I will buy equity or debt assets, hold and sell according to my plan. Second, trading means I will take position in derivative instrument and square off according to my plan or within the system provided expiry time. Third, trading means I will buy insurances to counter unlimited loss, and renew the insurance according to my own plan. Not necessarily, I will buy insurances for every type of assets I have in my portfolio. I will use my knowledge on trading methodologies, what to buy and what to sell. And my skill should be in trading to plan how and when to buy or sell. So, in my dictionary, investment has little significance. Everything is trading. Time frame can span between seconds to decades. So, from that perspective, my suggestion to all of you is, please line up your trades one after another and create a link list. Your strategy should be how to sustain longer. Learn from losing trades. You will get profitable trades for sure. But do not lose so much that you are thrown out of market. Here comes good example of different stat rulers in different field. Roger Federer in tennis, Sachin Tendulkar in cricket, Warren Buffett in stock market, Lata Mangeshkar in singing. They ruled the statistics in their field in their era. Remember, they all had rough time on their journey. But they ran long race to shine ultimately. All of them are talented, no doubt on that. But talent did not take them to the highest level. There are multiple reasons, but the biggest reason for their success is they sustained and performed longer time in their own field of expertise. They invested a lot of time to create building blocks for their career. They never tried to cash in the invested part. What exactly they did? They traded their experience correctly at every event separately with different focus. It helped them to win every title and reach every milestone. Stat rulers are not all genius, but they all are great. The greatness comes only after staying in the game for a long period of time in the same game. Having talent is an advantage, but that is not the automatic passport to success. So, here are the salient key points for you to remember. 1. Stay in the game for long time. If you ask how long, answer will be as long as possible. 2. Never give up during unfavorable time. Step back, wait and prepare yourself for a leap for quantum jump. 3. How much time is spent earlier is irrelevant. It is critical how much time is left. Experience does matter, but does not guarantee future. 4. Maximize favorable time. Embrace your time to achieve most during the phase when things are working for you. 5. Increase conversion ratio. Better reveal the power of value compounding. 6. Sign on non-compete clauses. Stat rulers compete with themselves, not with others. Okay, if I summarize now what I tried to convey so far. Stat rulers invest time without any intention to get quick return. They dedicate time to build their base strong. They do not invest time with any intention to encash that. That part is investment only. To achieve short-term goals, they take small steps, put focus to get best return out of it. These parts are trading. Each step is the building block for the next step. Trading in the financial market should be taken exactly as the same spirit. What I am trying with all these examples and different quotes, just to transform your thought process if that benefits you. Always blend your own thoughts to discover your own DNA. I will leave you with one viewpoint as takeaway from today's session to decide. Leading life is nothing but multiple trading. Take every trade in a manner so that you can trade longer period of time. It's up to you whether you will stay out of trading in financial market, or you will take chance to solidify your financial strength through trading in financial instruments. Derivative trading is an essential part of any financial trading system. Combine derivative strategies to get full benefit of trading in the financial capital market. Please subscribe the channel and hit notification bell to stay connected.